Thank you, Darwin, and good afternoon, ladies and gentlemen, and thank you for joining our quarterly earnings call. And we have uploaded the presentation to the stock exchange. I'm sure you have seen that. And yesterday we announced our results for the third quarter of the financial year 2023-24. And in the next 20-25 minutes, together with my colleagues, Ajay Singh, CFO, and the Company Secretary, Poovanna, and Manashri Banerjee, Investor Relations, we will take you through the quarter numbers. And for the ease of reference, I'll read out the slide numbers in case you are following via phones or so. So this quarter, easing supply chains and better order execution helped continue the growth momentum. The prevailing positive economic environment in the country has India's energy transition pace, which will open up more opportunities in the coming quarters. With this, we remain committed to exploring new opportunities stemming from energy transition across geographies and creating a robust, sustainable, clean energy system. I go to slide number 3. Which is our license to operate. As we review the quarter, I want to recognize our most valuable asset, that's our employees. Our commitment to their safety has been unwavering, from offices to factories and on-site locations, and they return this with their ownership on safety matters. This quarter, we had several employee engagement programs across locations, factories, offices, focusing on employee well-being, shop floor demonstration, and life support trainings for all employee groups. At Hitachi Energy, safety is our license to operate. We never look the other way. We reiterated this tenet as we observed HSE Week in November 2023, team to do the right thing. All teams were reached using multiple platforms and formats, both virtual, physical workshops. The focus was on celebrating best practices and promoting HSE behaviors and drive us to world-class performance. We continue to receive recognition and appreciation letters from our discerning customers for driving HSE culture across the energy value chain. Sustainable safety practices and quality are always being paramount to us. We thank our clients, customers for their constant encouragement and continued support in enhancing the safety across all the locations. Moving to the slide number 4, this is also another very important for us, sustainability. The journey to carbon neutral journey by 2030 requires all teams within Hitachi Energy to be involved, contribute through innovative ideas, and take the initiative. In the period under review, the company focus was on improving waste flow management across 5 locations to reduce water and air pollution, which directly affect many ecosystems and species. All the projects follow in a very standard approach in creating a framework which can be scalable, repeatable at many of our locations. Along with this, the focus remained on the timely implementation of various ongoing sustainability projects across locations, like water conservation projects in Maneja, rainwater harvesting and recharge pits at Halol, installation of rooftop solar at Dodabalapur, to mention a few. Furthermore, there are several sustainability projects are in the pipeline for the coming quarters, like setting up a EV charging points, battery energy storage system, electrification of equipment such as forklifts, etc. The whole idea is that we have been working in decarbonizing our operations on all our factories, project sites, and also in offices, etc. Moving to the next slide, that is slide number 5. I think this you all know better than me. The Indian economy continues its growth momentum as per the government reports. The country's GDP is expected to grow 7.3% for FY23-24. The RBI has kept the rate of interest unchanged at 6.5%, but there is a slight rise in inflation as it touches 5.6% in November 2023 because of rise in food prices. On the power demand front, electricity demand in India is expected to touch 277 gigawatt and 360 gigawatt by 2027 and 2022 respectively, up from 239 gigawatt in September 2023. Whereas industry growth, IIP shows rise in India's factory output to a 16-month high in October. Also, study by India's largest nationalized bank suggests that individuals' average weighted mean income has risen 3.7x during FY14 to FY21, from a 3.1 lakh to 11.6 lakhs. And all this means that growth drivers for Hitachi Energy remain intact and tracking upwards. As you would be aware, we need to add 30 gigawatt of capacity annually to reach 290 gigawatt solar target by 2030. In wind, the first offshore tenders have been announced, 7 gigawatt to be actioned by FY24. In the transmission segment, already 35 the TBCB tariff-based competitive bidding projects were declared in current financial year, and 2 HVDC projects is expected to be awarded in the next 6 to 12 months. Similarly, for industry, the revival of private capex is likely driven by government various schemes, including production-linked incentive schemes. And on the consumption standpoint, and the rail, on the electrification standpoint, rail, metro, high-speed rail, rail electrification, rolling stock upgrade, fueling the growth of transport segment, and so on. So moving to next slide, that is slide number 6. In our pursuit of advancing the sustainable future for all, we continue to lead industry discussions across the entire value chain of the energy industry in India and also in the region at multiple forums and platforms. We are happy to inform you that the production for the Mumbai HVDC link valves has commenced in our HVDC and power quality factory in Chennai, and the work we do continue to be recognized by customers and industry peers. Hitachi Energy Tech Training and Experience Center in Maneja was recognized by Central Electricity Authority as a Category 1 for importing training in operation and maintenance of the transmission and distribution segment of power sector. Customers recognize us as a valuable partner, and we continue to translate excellence along the value chain with channel partner meets that focused on the role of technology in the energy transition. India has been championing the transition through its people, innovation, and policy. It is what makes the country a key market in the Hitachi Energy and Hitachi Group universe, reflected in the recent leadership meetings held in the country with the key stakeholders of Hitachi Energy Global Board. Moving to the next slide, slide number 7. During this quarter, we have commissioned several projects, just to name few, grid connection projects for the 300 megawatt hybrid renewable in Pavagada, Karnataka, transmission project for energy intensive steel industry in Cobra, Chhattisgarh. We also successfully commissioned a major data center project, 230 kV substation in Chennai, and as a broad spectrum of society recognize the urgency of energy transition. Our continued efforts have further cemented our reputation as a reliable partner and a pioneer in power technologies. Moving to the next slide, slide number 8. In the quarter ending December 31st, 2023, we received orders worth 1,235 crores, a flat year-on-year. Solid order execution coupled with easing in supply chains resulted year-on-year growth revenue of 23%, and the normalizing of supply chains also spurred year-on-year profit recovery, and profit before tax stood at 33.8 crores, up 152% year-on-year, and profit after tax was Indian rupees 23 crores, clocking a recovery of 400% year-on-year on a low base. As of December 31st, 2023, the order backlog stood at 7,552 crore, providing revenue visibility for almost 22 months. Some of the key order wins, as you can see here, it's a broad-based, right from the renewable to industry and the data centers and the rail, etc. And also the exports have contributed in that. Moving to the next slide, slide number 9, to provide some more color on the orders received, on the segmentation, on the channel mix. Demand for solar and wind energy, especially from utilities, continued its momentum in this quarter. We are actively partnering on various renewable developers projects and have made significant addition this quarter as a renewable witnessed a 54% growth in this quarter compared to the last quarter. The data center remain a high growth segment thanks to the push for 5G data localization regulations, etc., and data center policies. Data centers are a high growth segment in the Hitachi Energy strategy, and while the segment is nascent, we reported a very high 92% growth in orders in Q3 FY24. With the sheer potential of the market, we see this trend to continue in the future as well. While the orders for the transmission remained stable, there was a slight decline in the order for the rail segment, and reflecting the nature of customer orders this quarter in the projects and services take the lead, while sector-wise utilities saw a rise, and on the channel side, EPC leads in orders. Moving to the next slide, that is slide number 10. These are our levers for the long-term growth lever, that is service and exports. Order mix reflects our diversified portfolio across our install base and our focus on leveraging our key growth markets and capitalizing on market opportunities. We successfully secured key market wins in services and exports in line with our 2030 strategy. Export orders were up 61% year-on-year during the quarter, driven by transformers and high voltage products and also feeder factories, reaffirming our strategy of Make in India for India and the world. Orders for transformers came from Europe and African markets, while demand for power quality solutions were from South and Central America, Africa, US, and Europe. Some of the key orders include order from Azerbaijan for the high voltage equipment like LTBs, disconnectors, etc., and transformers from France, and GIS order from Spain and Portugal are a couple of examples. Service orders saw a growth of 70% year-on-year during the quarter, driven by utilities industry. Some of the key orders for the quarter is 400 kV RIP bushing replacement order, 11 kV bus bar retrofit order, and repair of some transformers, etc. We also received orders from across the border, which include training orders from Maldives and commissioning of 8 units from Qatar. So these are just examples to talk about how our long-term growth levers, both service and exports, are playing in that. So with this, I hand over to our CFO Ajay Singh to walk us through the next slides on the financial performance. Over to you, Ajay.
Thank you, Venu, and good afternoon to all, and hope you are all doing well at your end. Let me give a quick insight on the financial performance for this quarter. Excellent order execution and streamlining supply chain challenges have helped us to improve our revenue and bottom line in this quarter. The focus and the proactive approach has helped us to achieve better revenue vis-a-vis quarter-on-quarter and Y-on-Y. During this quarter, the company booked orders worth rupees 1,235 crore, stable year-on-year, while declining quarter-on-quarter mainly due to an exceptional order that we booked in the previous quarter. Whereas execution resulted in Y-on-Y and quarter-on-quarter revenue growth of 23% and 3.9% respectively, our revenue stood at 1,276 crore in this quarter. Easing of the supply chain constraints has further strengthened the quarter earnings and improved the bottom line. The same is spurred Y-on-Y profit recovery in quarter 3 FY24. Profit before tax stood 33.8 crore, up 152% Y-on-Y on a low base. Profit after tax was 23 crore, again clocking a recovery of 400% Y-on-Y on a low base. Operational EBITDA stood at 81 crore in the quarter, with Y-on-Y and Q1 quarter-on-quarter growth of 62% and 24% respectively. Margin has been improving sequentially over the past 3 quarters, and if you recollect that from quarter 1, we were at the 3% operational EBITDA level. Last quarter, we clicked 5.3%, and in the current quarter, 6.3% operational EBITDA. Our order backlog stood at 7,552 crore, providing a very good revenue visibility for the next 22 months. If I go to the next slide, next slide, let me speak more in details and on this slide. So we have been discussing the ongoing macroeconomic issues over the past several quarters, and I would like to share an update on how the numbers were during this last 3 months. And basically, if you see the table, it gives a more clear picture on our relentless pursuit for improving the bottom line and progressive margin recovery. You see that the revenue improvement of 23% Y-on-Y to 1,276 crore in the quarter basically was mainly due to the good order execution. And if you see the other, gross margins, fairly it is seen as a consistent. The expenses also in this current quarter are consistent compared to the previous quarter, and that is how, at the overall level, we could reach PBT at 2.6% for this quarter. With this, I hand over to Venu.
Thank you, Ajay. And moving to the next slide, that is slide 13. So, as you know, India is becoming a leader in clean tech, and our investments have made us a node for exports. And we have been also talking about how our export strategy has been. And exports are a growth lever for the company, including through its related party entities. And the company procures and sells products, component systems, renders and receives services from related party entities. In this slide, we anticipate a few transactions with Hitachi Energy Sweden AB, a related party entity, wherein the transaction amount is likely to exceed the materiality threshold of 448 crores, as it applies to our company as prescribed under Section 188 of the Companies Act 2013 and Regulation 23 of SEBI LODA. Based on the recommendation of the Audit Committee, the Board of Directors have considered and approved issuance of postal ballot notice for approval of material related party transaction with Hitachi Energy Sweden AB, entered or to be entered for an aggregate value of up to 700 crores in FY23-24. Transaction with this entity has not exceeded the materiality threshold as of now and is likely to exceed marginally. Shareholders' approval will be sought to remain in compliance with the statutory requirement. The nature of transactions include sale or purchase of product, component, system, rendering and receiving of services to and from Hitachi Energy Sweden AB, Västerås, Sweden. All transactions are in the ordinary course of business of the company and at arm's length basis. The company will be commencing a postal ballot exercise to secure the approval of shareholders. And moving to the next slide, which is my last slide, before I open for the question and answers. As we move ahead, priorities for 2024, because we are entering the last quarter of this financial year. As we move ahead, our growth levers remain intact. While maintaining leadership in our core segments, we will nurture high growth segments that cater to the evolving needs of the sector, harnessing new segments and markets, expanding at the edge of the grids. We are seeing the fruits of focusing on our capabilities in services, exports, and digital verticals, and we will continue to strengthen the same. In our operations, we will continue to seek to maximize the efficiencies in converting our significant order backlog to revenue and revenue accretion, while in the short term staying agile regarding the evolving situation on the trade routes, logistics, etc. Nevertheless, such execution, when coupled with the operational excellence across manufacturing and functional processes, will result in margin accretion going forward. Our teams will reinforce their efforts to the last leg of transition in the coming quarter as we enter the implementation phase of REVA, a multi-year project to upgrade our core ERP systems, thereby integrating core businesses, functions, and processes in a single platform. thus helping enhance operational agility, quality, and productivity. Our purpose remains to advance a sustainable energy future for all, and we can deliver sustainably delivery this if our teams are consistently safe, healthy, strong, and agile. People remain, as always, at the heart of our operations, and we will continue to build and deliver sustainable stakeholders' value. So with this, I close my presentation and open the channel for the questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We also request that you please restrict your questions to 2 per participant. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah. Good evening, sir. My first question is on order inflow. So order inflow is yet to see the momentum. We were expecting that given the strong bidding activity for transmission projects in the last 9 months, especially in the domestic market, my question is, how has been the inquiry from bidders for the transmission equipment, and can we expect a slightly higher order inflow as we enter calendar year 25? Calendar year 24, yeah.
Yeah. So thank you, Mohit. As I talked about in my opening comments, I think we have a very strong, robust pipeline across the sectors, across the segments where we are operating. For example, the transmission is the one segment where we talked about. As I said, there are a lot of tariff-based bidding projects out there, including some of the STATCOM projects, and there are HVDC projects are under pipeline, and there are also large 765 kV projects are also coming up for bidding in that. And I would say that there is a very robust pipeline, a very strong pipeline in the coming quarters.
My second question is, sir, have you completed the study and submitted the reports for Leh Ladakh for technical feasibility to Power Grid? And can you expect this project to progress in the next fiscal or this calendar year?
So again, this is a very interesting question. So we have, as part of our agreement with our customer, complete by 31st of March. So we are on track. So progressively, we have to submit, various reports. So we are already submitting, a couple of reports in that. So we are on track. So we will be submitting our study report in line with that.
And how has been your experience, sir? If you can give some color.
Which one?
How has been the experience? Do you think that this is feasible, technically feasible, and this can be done at a reasonable cost?
Yeah, I think our customer will talk about more on that. But from our standpoint, is that we do have a technical solutions for that, and that's what we have not completed the study yet. There are a couple of studies have done, but there are many more studies to be completed, and we still have a couple of weeks before we complete and conclude our study report in that. But we do believe that there are technical solutions are available.
Understood, sir. Thank you for the opportunity. Best of luck, sir. Thank you.
Thank you. The next question is from the line of Renu Baid from IIFL Securities. Please go ahead.
Yeah, hi. Good evening, sir. So my first question is on the bullet train or the high-speed project. We were expecting finalization of few packages this last year, and L&T was announced bidder for 10,000 crore plus of orders. So what is now the opportunity size for us? Are we still in discussion with EPC contractors, partners, and what could be the timeline when of receipt of such orders?
Yeah. So thank you, Renu. I think the question you all know that the electrical package has been finalized on the EPC. So we have also submitted our bids to the EPCs, including the winning bidder. So we are in touch with them, and we normally do not mention the size of the thing until we conclude it. It's various things, including all our products are there. So it depends upon what kind of customer takes, what's the business model, how packaging, those things will differ the size of the thing, right? As we speak, we have done our submission.
Award to us, if we are competitive, what are the timelines of award of these electrical equipment by
maybe 1 to 2 quarters is what we expect. 1 to 2 quarters.
Got it. So secondly, if you look on the broad basis, given the way domestic market has bounced back with respect to high voltage transmission equipment, clearly supplies are in short, and it seems that prices in general have improved. So by when do we expect those better margin orders will start reflecting in our execution and our numbers? So how far are we? Is it just a couple of quarters away? Or probably our timelines and lead cycle of orders are different from the ones which are getting finalized. Because while we have been consistent in the last couple of quarters on gross margins and cost structures, it still seems to be suboptimal when we compare it with the rest of the key large domestic players. So how far are we in terms of getting these better margin orders in our backlog? And also any view in terms of, because we also had a target to improve the operating margins to near double-digit levels by next year. So are we broadly on track, or there could be some additional hiccups on the way?
Yeah. So I think, again, it's a very interesting question, Renu, and we have been very consistent with what we have been saying on this. And we do have, I think our portfolio, our order backlog is very robust. It's, again, a broad-based, and both our exports and the service, which is also part of our portfolio, will definitely add to the bottom line in that. So while we talk, there are a lot of challenges, geopolitical, and also the transport logistics. As we are more improving on our exports, it's also important that our logistics on the export is also extremely need to be robust. And any kind of external thing like a Red Sea and other things do have a challenge over a period of time. And it's important that we need to navigate those things and get into that. But having said that, if you really look at what we have been talking about, we said we have been sequentially improved, and we continue to perform a sequential improvement in the last 3 quarters. So operational EBITDA, you take from the 3% in the quarter 1 and 5.8%, and now we came to 6.3%. So sequentially, we are improving it, and we also have a clear strategy to bring the double-digit operational EBITDA by end of financial year is what we said in that. So again, look at our strategy. We said that exports, when we start about, we are looking at in the 20-25% range, and then we have stabilized 25%. And if you really look at the 9 months exports, and we are already 30+%. So the strategy has to be fall in place and then become a little more stable, and that's how we are doing it. And on the margins will definitely will flow in once we execute the order backlog, which includes the export, which includes the service, which includes other things in that.
Sure. And lastly, if I can, what would be the status of the Mumbai HVDC? You did mention valves getting manufactured at Chennai plant. So in terms of execution timelines of this backlog, how should we look at end of this fiscal and next fiscal specifically?
Yeah. So as part of our contract with our customers, we should complete anywhere between the March 25 to June 25, March between that. I think we are on track, both on the execution on the ground and as well as on the manufacturing of those various components, not only in India but also in other places. So we are very much on track on that.
Got it. Sure. Thanks much, and all the best.
Thank you.
Thank you. We have the next question from the line of Parikshit Kanpal from HDFC Securities. Please go ahead.
Yeah, hi Venu. Congratulations on a decent quarter. So my question is again on margins. So we had done 6.3% of operating EBITDA margins this quarter. So we have a journey of 10%, I think, towards the end of FY25. So every quarter, do we expect some improvement to bridge that gap of almost 400 basis points, at least to start with at least 10% by FY25 end?
Yeah, as we just now spoke, Parikshit, so that is the endeavor. Our endeavor is to make sequential improvement while navigating the various challenges, etc.
Okay. Second question is on other expenses. So when I compare with your other peer, I mean, who's almost half your size, and when I see your other expenses, gross margins largely in line, but your other expenses are substantially higher. So is there any component there? I mean, earlier we had this IT support from ABB India, so where we were incurring expenses. So has that come down? Are we now on our own IT network? So if we can, what could be the components that we can reduce and help improve our margins?
Maybe Ajay, our CFO, would add to this, Parikshit.
Thank you, Parikshit, for this question. So if you see our other expenses, you can see that current year results also. We are fairly consistent compared to the earlier quarter. So if you see Y&Y, our other expenses were 21.7%. Now we are hovering around 19.4%. Having said that, on the IT cost, yes, the IT cost, currently we are not yet totally out of the ABB support. We are still running at USA, and we are expecting that we'll be out of this support mostly by the mid next year. So, but even if you are out of this support, we'll have our own infrastructure where the cost will come. But overall, if I see the mix, I don't see any additional cost over than this that is popping up in the quarter. So definitely going forward, as the external impacts comes down, we will be improving on the margins as such.
Okay. So just the last, if I may, sir. So this margin improvement, so will it come from better pricing? Do we still have some under absorptions of inflation on the pricing side? Because on one side, we are talking about very, very strong opportunity on the demand side. Other players are talking about under investment in capacity. So it definitely builds a scenario for increasing prices. So have you already taken some price hikes for the last 6 months? So if you can give some color on the improvement in margin trajectory, so which will be the factors which will be driving this?
Yeah. Our margin improvement, Parikshit, is basically with a factor of our improving our revenue accretion, and because we have a strong backlog, and that will be getting to the revenue accretion over a period of time. And then we also said our two levers, which are service and exports, will contribute that as export revenue kick in. And also service revenue kicks in, then that also will do that. And in addition to that, we, as you know, that we have invested heavily in the last 2-3 years and set up a new gym factories, and those factories are also filling up now. One example is this, the Chennai Power System and HVDC factory, where we started now producing valves on that. We also now filled with orders from other things. So those things, we are able to leverage of those assets, and that also will add both revenue accretion as well as the margin accretion.
What about the price hikes, sir? Any color on the price hikes have you taken in the last 6 months?
You should understand that India is a very competitive market, and we are getting a price increase, but also you should understand that the commodity prices also are equally increasing in that. So we are, whatever the increase is coming, basically is able to do that. Then, yes, we are also looking at a very quality order. So we have initiated pricing excellence as a strategy to look at, bring the more quality orders as part of the portfolio, and that should also help us to realize those things.
Okay, sir. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Mahesh Bendre from LIC Mutual Fund. Please go ahead.
Hi, sir. Thank you so much for the opportunity. Sir, previous 2 quarters we were mentioning about the chip shortages that was actually limiting your production and delivery. So has that problem been solved, or still is there some issue on that?
Yeah. Thank you, Mahesh. I think there I would say that it has now become better now. So we are able to, predict and able to, upfront order those components. So we are partly, I would say that we are mitigated, and then but with a better forecasting things and upfront ordering, so we are able to manage at this point in time.
Sure. And sir, if I look at last 5 to 6 quarters, apart from the HVDC orders, our order inflow has been almost constant for every quarter. I mean, when we look at the peers or other players in the industry, there is a growth, significant growth we are witnessing on order inflow side. But in our side, it's remaining almost stagnant. So what could be the possible reason for this, sir?
I don't think our orders are stagnant. If you really look at our orders on a quarter-on-quarter, we are having a very, very good growth. And on top of that, if you really look at 9 months put together, and if you take the last HVDC project, we have take the HVDC project out, and then you look at the 9 months cumulative, so we have a very strong growth, right? So look at our numbers on a cumulative basis, and then I think we have a strong growth even if you remove the HVDC project, because the HVDC project is there in the last year, which is not comparable for the same reason.
No, I was mentioning about the export orders that we are getting very high traction. So if you take them aside, so domestic side, we are still, given the position we are into, and transmission capex that is coming up. So that seems to be low on that side. Yeah,
I not sure from what the number you're looking at it. Even if you remove the exports, also and the domestic demand, we still have a growth removing HVDC project.
Sure. Thank you, sir.
And the base orders, if I can add to you, base orders, there's a 16% growth Y on Y. Yeah?
Sure. Thank you, sir.
Thank you. The next question is from the line of Umesh Raut from Nomura, India. Please go ahead.
Thank you, sir, for the opportunity. Sir, first of all, on the export side.
Can you please come close to the mic, Mr. Umesh?
This is fine, sir?
Yeah, this is better.
Yeah, sure. So the first question is more of on the export side. So when you are seeing strong demand on the export from various markets, I just wanted to know how much of these orders are coming in from parent entities and how much beyond parent entities?
You are talking about the exports?
Yes, exports with Hitachi Group and exports with non-Hitachi Group.
Yeah. So it's a ballpark, if I say. Yeah, it's a ballpark in the range of anywhere between 50 to 60% coming from our internal companies, and the rest are coming from direct exports.
Okay. And sir, now this new proposal which is under consideration, where you are talking about increasing.
Again, here we need to understand, just as a comment, we got to understand. For example, internal means we supply a GIS in Europe, for example. Okay, we supply GIS. So since we do not have any sales offices there, the GIS will be booked by the local Hitachi Energy office, for example, the one which we booked, and that will be given as order there. So that's also we consider as an internal order, even though we send as a full-fledged thing.
Okay. And just wanted to harp upon the profitability side as well. So how is profitability different between these two segments?
So we will not able to give, no, when you say these two segments means all the export orders, whether it is internal or external, it's arm's length only.
Got it, sir. And sir, regarding this proposal, which is under consideration regarding RPT transactions now going up to about 700 crores for full year 24. So how much of that has been booked in first 9 months FY24?
Yeah, maybe Puvana, you like to add, Puvana?
Yeah, sure. Umesh, thanks for that. As of December, we've had invoiceable transactions of 68%.
Yeah, we're done close to 68% has been booked.
Got it, sir. Sir, second question is more on the your comment from the presentation where you are referring that private capex or demand from industry side is also kind of looking up. But if I look at order inflow for third quarter, this is more of down, especially from the industry side. So where exactly you are seeing uptake in terms of industries, and where exactly there is still downturn which is kind of visible in the market?
Yeah. So when I talked about, industrial capex is reviving, is basically I'm talking about the broad base. In one quarter we may have a large order book in that, so which is not comparable in that. But what we see is that we see, a lot of traction on the industrial thing, expansions of that, and service standpoint, digital, etc. So digital products they're buying, they're right to decarbonizing of the industries. So these are the ones what I'm talking about, thing. Whether you talk about the steel, cement industries, and data center. Anyway, we have a huge growth in that. So those are the things I'm talking about.
Got it, sir. Sir, last bit is more of clarification. So again, referring to slide number 9, where contribution from EPC channel has significantly went up. So would it fair to assume that this will add further pressure on profitability side, assuming that EPC channel would have relatively lower margins than the direct end user?
So when we talk about, on the EPC, we have our strategy is that we will not able to sell everything to direct end users, so we need these channels, and that's how we have been doing it. Whether the EPCs, OEMs, distributors are part and parcel of our go-to-market strategy in that. And having said that, just because our EPCs have gone up, that not that we compromise our quality of the order. So we have a clear strategy on those things, and then we are maintaining those things. And as I said previously, we started the pricing excellence. The whole idea of the pricing excellence is to look at what is the value add. We will get it whether we are selling to EPCs, we are selling to direct end customers. We do not see any of those compromise taking place. We do not see any kind of dilution of our margins just because we sell it to different channels.
Got it, sir. Thank you so much, and all the best.
Thank you.
Thank you. The next question is from the line of Priyank Chedda from Vallum Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. So I want to, I would request you to get more, give us more insights on the levers to the margin expansion which you spoke. First lever is service and exports. If you can help us with the data on how much is the service and exports revenue as on date. The second lever was revenue recognition picking up. So if you can help us with what would be the revenue recognition that you are looking towards FY25, would Mumbai HVDC project revenue recognition itself lead to a strong operating leverage? And the third lever that you clearly mentioned was utilizations. So what are the current utilization levels, and what is the kind of a levels that you're looking towards in the coming year? Thank you.
Thank you, Priyank. I think we do not give any details on a project level, and also will not give any forward-looking information on that, what will be the revenue coming in this quarter. So all I say that, we have a still strong order backlog, and that order backlog is getting converted into the revenue, and that's where the revenue accretion is coming about. So on the levers about margin accretion, I have already talked about. I think I have nothing more to add to what I have already talked about in that. So revenue recognition is revenue accretion. Revenue accretion, the revenue growth is a function of what backlog we have and what is the existing book-to-bill order. So that's what is what we're going to do that. And having said that, let me also give you a couple of data points for you to understand that exports we were talking about in the range of 25%, right? So we see export revenue depending on the quarter 20 to 23, 24% in that. And the service is high single digit, which is moving towards a double digit, slowly entering into double digit. So that's how the thing what we are looking at in the margin acquisition standpoint.
And so the current utilization level?
Yeah, current utilization level is depending upon which factory. It's varying anywhere between 75% to upwards close to 90, 85, 90%. And some new factories, as you know, it will not get into that. So new factories which we inaugurated definitely has a low utilization ratio, but they are also filling up possibly.
Perfect. And just a data keeping question that I have on the operating optional EBITDA, which Hitachi reports, is at around 81 crores, while the actual reported EBITDA is at around 65 crores. So what's the 68 crores? So what's the 13 crore difference with respect to it? Maybe related to FX or some other expenses, which if you would like to call out.
Maybe our CFO Ajay Singh will.
Thank you for the question, and you are right. It is mainly on the FX part that delta is there.
So we have reported a FX loss on to the tune of 13 crores.
Yeah, if you see our results, you can see that in this current quarter we have reported a FX loss of 9.8 crores. That is there.
Okay, so if you can help us, what is the nature of this? Why are we able to report the losses? It's just an accounting entry which will get reversed in the coming quarters?
Yes, it is basically a restatement of this payables.
Accounting entry. Yeah, it's accounting entry.
Got it. And just to again clarify, Mumbai HVDC project was not recognized in the current quarter, right? We would be starting it from Q4, which is in the coming quarter. And also, if you can help us, the STATCOM order that we had received in the last quarter, by when what's the timeline for execution of that, the starting period and the end period?
Mumbai HVDC, the project has started. As the project gets started, the revenue also start getting recognition based on the milestones being done, right? Both at the project site and also some of the things in that. But it is a slow start now. So in the coming quarters, we see a lot of material big items will be coming in. So that will have a much better, higher revenue from the HVDC Mumbai project. So STATCOM, we are supposed to complete in 24 months, and we have already started. And first 2 quarters will be a lot of engineering approvals, etc., design engineering approvals, and thereafter we see the project is starting with the margin. Project is starting with the revenue.
All right. Thanks a lot for answering all the questions.
Thank you.
Thank you. The next question is from the line of Dhavan Shah from AlfAccurate Advisors. Please go ahead.
Yeah, thanks for the opportunity, sir. So my question is on the order book breakup. So right now the order book is roughly 7,500 odd crores, and if we exclude this 2,000 crore HVDC, so what would be the order book breakup between service, exports, and then the other industries like the data center and the other emerging ones? Can you share the breakup of that, and what would be the execution timing?
Yeah, roughly, you can take 25% of that is exports, and close to 9 to 10% is the service orders, and that's what is our ballpark figures.
And the other industries, data center and the other emerging ones?
We don't split that, industry-wise, utilities industries and the data centers at this point in time. So, but we have not been giving that. It's not that we don't split. We have not been giving figures so far.
Okay. And as you said that the value-added segment, like the exports and the service revenue, would go up in the coming quarters, which would help you to improve the overall EBITDA margin. So, what kind of gross margins do we do? And right now it is roughly 40%. So, what would be your endeavor maybe by FY25, and what can be the gross margin? Because in the earlier years we did roughly 45-50% also. So, is this achievable, like 45% gross margins?
So we will not talk about what's the gross margin. What we are talking is that we are sticking to that we are sequentially improving on the bottom line, which includes our better order gross margins, and also on the cost side, and also various other measures. So it's a combination of all that. We'll get into the 10% operational EBITDA by end of FY25, assuming that all the headwinds are normalizes. So that's what we are saying.
Sure, sir. Yeah, that's all from my side. Thank you.
Since we have very few minutes, can we please restrict to 2 questions, because we also have a couple of others in the queue, please.
Sure. Thanks.
Operator, can you please insist on 2 questions, please?
Certainly, sir. Ladies and gentlemen, we request you to please restrict your questions to 2 questions per participant. We have the next question from the line of Nikhil Abhyankar from ICICI Securities. Please go ahead.
Good afternoon, sir. Thanks for the opportunity. So, there are multiple projects already announced under the RDSS scheme. So, what kind of pipeline do we have remaining going forward? And are we selling it directly to the DISCOMs, or are we going through the EPC players?
Yeah. So we have, again, these particular projects are combination of various things, which includes, the engineering, procurement, and also not only the SCADA and other things, but also in many other aspects of the digital infrastructure. And we would like to play in line with our strategy. We will restrict ourselves into the SCADA, automation, DMS, EMS, and those are the things in that. So we are working with the partners. We are working with some of the EPCs, and some of the projects we have received orders from PGCL and also other places. In some places, wherever it is meeting our strategy, so we are also bidding directly on that. So it's a combination of various things, but we are very actively pursuing all these projects to position our portfolio there.
So what can be the pipeline, say, in next 12 months?
So again, we don't quantify the pipeline for any of these segments, but the pipeline is very robust, Nikhil.
Okay, sir. That's it from my side. Thank you.
Thank you. The next question is from the line of Balchandra Vasant Shinde from Kotak Life. Please go ahead.
Good evening, sir. Sir, would like to know on the longer term perspective, like since we have started with the facility in HVDC, how the localization content versus our peers and cost advantages wise, how we are placements, like there are lined up HVDC orders, and do we see that competitive edge for us as compared to peers?
Yeah. So I think again this is a very good, interesting question. As you know, HVDC, so we have pioneered this technology, and we will be completing 70 years of this technology globally as a inventor and a pioneer technology by Hitachi Energy and our predecessors. Right. So we have, as we speak, we have globally as well as in India, almost 50% of our existing installation HVDC links run through Hitachi Energy technology. So we do have quite a robust, end-to-end offerings. In India, for example, we manufacture the converter transformer, we do the valves, we have the switchgear, and we do also end-to-end engineering. That's also quite a big cost element in a HVDC kind of projects. So with that, I think we should be in a better position to offer our competitive solutions to our customers.
And the ordering wise, as we mentioned that every year one HVDC ordering is expected. But this year we have not seen that kind of a, means though tendering has happened, but still anything end result we have not seen. Are we expecting anything in next 6 months or in this calendar year? Which orders we should expect to come into play?
So you probably know the Badla is already tendered and which is due now, 1st of February. And if there is no extension, the tender will be submitted as per the due date, right, which is already there in the REC website. So you can also look at the schedule of ordering, etc. They have already published in their website.
Okay. Thanks very much.
Thank you.
Thank you.
Maybe one last question.
Sure. Yes. The next question is from the line of Tina Virmani from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. Thanks for taking my question. I just have one question. Regarding this 700 crore cost with the related parties, just wanted to understand, is it possible to localize these products which you are right now thinking of procuring from the parent entity over a period of time? Or just wanted to understand whether this cost will remain in future too for the company, or over a period of time we can think of manufacturing these.
So maybe I think we may have to clarify. This is not a cost on this. This is a related party transaction. Both the products we sell it to our thing, and also some of them we buy there. So it is not.
Okay.
Entirely we are not buying there. It is both purchase and sale.
Total put together is around 700 crore.
Yeah, exactly.
And whatever you are procuring from the entity, is it possible to localize those products, or those products will continue to be procured from them only?
Some of the products we continue to procure. It's not that, the localization we have been doing to the extent possible today. For example, almost 85% of what we produce globally, we do it locally here. So we already, reached a very, very substantial level of localization and local manufacturing in that.
Okay.
The bulk of this, what we are talking about, is the sale what we do there.
Okay. So this will not come in your path to achieve that double-digit margin trajectory which you have highlighted by end of FY25.
No. This is no, it is not. This is not a cost, as I said. This is basically we are selling our products from here to our Sweden factory, and the bulk of that is our products we are selling to them, and some we are also receiving it because, for example, some of our HVDC, we have to get some components from there, so that is how it goes like that. So it is for both sale and purchase.
So
yeah, sure, Ajay, go ahead.
Let me a little bit more give one clarification. So this is just a regulatory requirement that we have to comply with. But this is the related party transactions with our entity Sweden, where the overall transaction is going to hit the threshold, and threshold is 10% of our last year's revenue. And since it is crossing the threshold, as a good governance, it is required that we have to take a prior approval from the minority shareholders, and that is why we are going ahead with this ballot paper where we seek approval from the minority shareholders in order to be compliant with the related party regulations.
Thank you.
I hope I have clarified.
Yes.
I would now like to hand the conference over to Mr. N. Venu for closing comments. Over to you, sir.
So thank you very much, ladies and gentlemen, for attending to this conference call and asking a very interesting questions. And as we navigate all the challenges and then continue to grow our strong pipeline, both on the orders and also converting them into margin, and then finally we are able to reach our goal on the margin. And we are also enabling the sustainable energy future, advancing sustainable energy future for all of our customers. And this is a journey, and we would like to continue this journey together. And thank you very much once again taking time from your busy schedule and attending to that. Please take care and stay safe. Thank you.
Thank you. On behalf of Hitachi Energy India Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.